Mr. Sobti, good morning. Thank you for joining us, and my apologies at the outside for the confusion, but thank you for staying back and thank you for agreeing to speak to us. Mr. Sobti, this is Nikunj Dalmia from the studio. Is my voice reaching you?
Yes, Nikunj. Good morning.
My apologies at the outset for the confusion. Thank you for your time. I know you've extended your meeting just to accommodate this interview request. So thank you very much once again.
You're most welcome, Nikunj.
I just want to address something which has been of immense market curiosity. And this goes back with your disclosures. Along with your Q4 numbers, not Q1 numbers, IL&FS, your disclosures on IL&FS and every aspect was crystal clear. Yet markets, they continue to remain nervous. You've been very forthright. You've been very open. You've been, in fact, urging investors and your analyst fraternity to ask the difficult questions. Yet markets somehow are seemingly worried about the disclosures. Why is that?
Because I don't know why that is, but I think we are quite determined that in no manner we will hold back information. 10 years ago, 11 years ago, we set the benchmark in terms of disclosures. And post that IL&FS incident, when the market became a little skeptical, we thought that we'd do some additional disclosures. For instance, in Q4 and in Q1 again, where I think perhaps one of the few banks which actually disclosed SMA2 sectoral data, which means for every sector, SMA1, SMA2 data we have given. So I think it's the market certainly went into a little bit of skepticism, but I think our job is to keep revealing data transparently and keep performing well.
Mr. Sobti, there was a news development on Yes Bank assets, and some of the assets where court in a sense has recognized them. How will that impact your IL&FS exposure?
No, see, IL&FS exposure, as far as we are concerned, we have already made much more provisions than anybody else has made. Now our focus is on the recoveries. Our focus is on recoveries. Our sensing is that the whole process of bidding of the few assets which have been put out for sale will sort of close sooner than later, hopefully by end of this month. And the sensing, talking to people, is that a substantial part of the debt would be covered. So in the operating companies, we are hopeful now that sooner than later, and hope it is sooner, that there will be handsome recoveries.
Okay, I also want to address something which again is a market curiosity. Your exposure to autos. The Indian auto sector may be slowing down, but your auto business is not going through any kind of pain. It is still growing. So walk us through the secret sauce here. Auto sales slowing down, problems at auto dealer levels, NPAs are rising, and yet your auto business is looking strong. Why is that?
See, I think one of the major reasons is that we've been in the auto business now for almost 30 years. And, we know this business inside out. The other reason is that whenever there is a slowdown, the number of financiers and operators in this market, they fade away, and a handful are only left. We are amongst those handful. We've seen these cycles in the last 10, 11 years. I've seen 3 or 4 of these cycles, and every time there was a downturn in the cycle, the number of players reduced, our market share increased. That is exactly what has happened. And we disclose a vehicle finance growth of 24%, but if you break it into components, you will see how secular that growth is. So the commercial vehicle grew 20%. The three-wheeler market grew 32%. The two-wheeler market grew, for us, financing book grew by 28%. So it's very well spread out. The tractor market, for instance, we've taken very good market share. So there is a strong shift of market share, and it happens every time that there is a downturn. The quality of the book remains extremely stable. the days overdues actually have reduced in our book. So we are pretty confident that we'll be able to maintain this sort of momentum. And I think that the second half of the year, we will start seeing an uptick in the market as a whole.
Mr. Sobti, CASA deposits grew well by 25 to 43% of deposits, but the share in funds is lower at about 35%. Why is that?
Sorry, the share in?
The share in funds is lower at 35%.
No, so it's, this is a quarterly sort of a movement. One quarter you will see it moving one way, the other quarter it sees moving the other way. Sometimes SARS moves faster, sometimes current accounts sort of move faster. There is no trend that we are seeing, except that I think there is strong momentum, not only on the CASA side of the business, and I think a lot of focus has also been given on retail fixed deposits. Retail fixed deposits, if the deposits grew 26%, then our retail fixed deposit grew by almost 42%. So we have opened the doors, the floodgates for retailization of our fixed deposits. So I think deposit growth is a good story that is building up. We have revitalized the focus of the branches. We grew 29% last quarter. We grew 26% this quarter. And I think going forward, you will see the similar sort of growths emerging. So there is no trend in a particular area which is disturbing.
Right, Mr. Sobti, it has been fairly encouraging even in terms of your overall CASA ratio, your gross loan portfolio. But I just want to understand, what is the outlook when it comes to your growth in advances, not just for the bank, but can you highlight for the industry as well?
Yeah, industry, I think, certainly has seen some slowdown. So actually credit growth came off, it seems, to around 12%. I think that the improvement in liquidity, which we are seeing pretty robust improvements have happened in the last, say, month or so, a month and a half or so. Banks were in deficit, but banks are now much more liquid. I think that overall industry growth should start picking up in the second half of the year. As far as our book is concerned, the book is very well sort of distributed from microfinance to the very large corporate, and all parts of it are growing pretty well. We believe that with the addition of Bharat Financial inclusion, with the merger, that we should grow upwards of 25%. Even with, on a standalone basis, last quarter, the bank grew 26%. With Bharat, we grew 28%. So I think there is a high degree of confidence that we should be able to maintain the growth momentum in our loan book upwards of 25%.
Can you quantify or broadly specify that when you're talking about a 20% plus loan book growth, which is a very formidable guidance on a base like yours, which are the areas where you're feeling confident? Because the general word on the street is that the corporate credit is getting crunch. It's not that banks do not want to lend or promoters do not want to borrow, but the economic activity and the desire to participate and the desire to do capex has come to a complete standstill.
Yeah, so I think that there's going to be, you'll see, I think, stronger momentum on the retail and the vehicle finance and the microfinance book. Not that the corporate book won't grow. We expect the corporate book to grow in the early sort of 20s. The microfinance book, especially the Bharat book, is growing pretty robustly. Bharat is going to grow in the mid-30s or so. Our non-vehicle retail is going to grow in the mid-20s, if not slightly better. And the other significant component of our book is the gem and jewelry part, which is growing steadily at 13-14%, etc. So I think most parts will grow well. Corporate, as I said, used to grow in the late 20s, and I think corporate is going to grow in the early 20s. But this growth, mind you, is after we are doing sell downs. So every quarter we do sell downs, really to manage capital, etc. So I think most parts should grow well. Some will grow faster, as I said, microfinance, and some will grow more moderately in the early 20s.
I've got a very interesting report from CLSA in my hand, and I don't want to get this one wrong, Mr. Sobti, so I'm going to phrase my question rather carefully. The CLSA report says the resolution of IL&FS and top 3 assets, which include Dewan, Z and ADA Group, the net exposure has declined from 1.9% to 1.7%, which means that your accounts where exposure was large to troubled companies, that exposure has come down. Can you walk us through this number? Because this is an important number which, in a sense, will tell the market that the problem areas are now getting reduced. There's a contraction in the bad loan book for IndusInd Bank.
Yeah, so IL&FS the whole market knows about, because we have talked a lot about it for so many quarters, and we made a very strong provision. As I said, now the focus is on recoveries over there. The other names that I mentioned, we are not very specific on the names, but since you have mentioned the names, one in media, one in a diversified NBFC, the other in the housing side, I think these exposures in our books have never become overdue, and they've remained standard. There is a steady reduction in these exposures as well, and we hope that if things work out the way we hope that they will work out, that these exposures will go down even further. As the report rightly says, that during the quarter it fell by almost 30 basis points, from 1.9 to around 1.6%, and we hope that going forward that this trending will continue, but we don't have overdues on account of some of these names that are being bandied about in our books. And they are very well secured. I think in our Q1 disclosures we have said very strong security, including listed stock, etc., and no overdues.
Right, so being very clear yet again in terms of your commentary, I'm sure the street and investors are certainly going to appreciate that. Mr. Sobti, just to talk a little bit about, dwell a little bit more on the asset quality front. Given the fact that we had seen the GNP ratio increase a little bit, can you just tell us a little bit about your outlook on the asset quality, given that, the exposure towards stressed accounts is at about 1.6% of the total loans? Can you throw some light in terms of projections?
Yeah, I think that we have seen a very stable asset quality. And I think a barometer of what you can expect in the near future is very clearly indicated by the SMA data that we give out. I don't recall anybody else giving that out. And we have now given that data out for 2 quarters. And very clearly, even if you see SMA 1, if not SMA 2, it's under absolute control. So I would say that we would see steadiness in our asset quality, and hopefully an improving trend going in the next few quarters.
Right. Now, the Bharat Financial merger, Mr. Sobti, added about 213 crores to Q1's consolidated profits. What's the kind of contribution that's expected, over FY20 on the back of this? How earnings accretive do you feel this could be going forward?
Well, I think the numbers speak for themselves in terms of accretion. As we said when we announced the merger, that this has a very salutary effect on interest margins, return on assets, return on equity. The cost to income ratio also goes down. Their book hardly has any NPAs to mention in this thing. So I think overall the merger has very strong beneficial impacts. Q1 did not show, because it happened actually on 4th of July. Q1 did not show the full impact of the synergies that we've also talked about. And those synergies have a potential of, raising the business by at least 15, if not 20 odd percent. So I think that the contribution of Bharat will be significant to the well-being of the bank, not only on the top line, but largely more on the bottom line. Although in terms of balance sheet, in balance sheet terms, it adds only maybe 6% to our balance sheet footage, but it has certainly the potential of adding up to 20% to our bottom line.
A very generic question, Mr. Sobti. Is the Indian financial space, whether it is banks or NBFCs right now, prepared for a casualty? It could be a casualty which could happen at an NBFC level, it could happen at a bank level, or it could happen at a large corporate level. But in general, do you think right now the system is immune to any kind of an adverse news, or that could shock the system?
No, see, I think it has to be a very reckless person who can make a very strong recommendation of that course. But, you know, I take comfort from, of course, our own knowledge of what's really happening. And also take comfort from the fact that the regulator has also not shown any form of sort of large-scale discomfort in terms of systemic issues. So I think systemically, any issue that can cause a systemic problem, I think is behind us. You could have one or two odd cases, but then one or two odd cases happen every year. I mean, in the last 10, 11 years that we've been in IndusInd Bank, I don't recall a single year where one or two or three cases did not go sort of belly up. So I don't think we need to be too pessimistic on this score. I think that the liquidity issues may remain, but we don't see too much of solvency issues happening in sectors like the one you mentioned, NBFC sector, and specifically an issue that can cause a systemic problem. The chances of that are pretty low.
Sure. Mr. Sobti, finally, you know, for the last ever so long, we've only been talking about the slowdown. I want to get your perspective going forward from here. We seem to be at a, friction point. Do you feel that the slowdown will improve, that the worst is over, we'll see growth resume? Or do you actually feel we could see things deteriorate here on post, whatever we've seen in terms of macro signals coming in from the budget and otherwise, and that perhaps the recovery will take longer?
Yeah, so I think that the major headlines that are actually coming out of the budget, this thing, and also, I mean, the regulatory stance is to infuse more liquidity and ensure there's credit growth. So once that sort of gets going, it may take another quarter to do that. I am pretty optimistic that the second half of the year is going to be much stronger than the first half of the year, because all the vectors look good. Pre-elections and all, everything sort of slows down. I would imagine that the government's infusion of money into circulation will also restart now, because the budget is oriented towards spending. So I think all this put together, liquidity, better liquidity in the hands of the banks, etc., should augur well for doing that. The sector, of course, that has really slowed down is really the NBFC sector, where liquidity issues have caused a drop in the growth, and the NBFC sector is a very important contributor to overall loan growth. And there, I think the steps that have been taken to put liquidity in the hands of the banks, the regulatory steps that have been taken, should start showing an impact in the next 3 months or so. So I'm optimistic that the second half of the year certainly is going to be much better than the first half of this year.
So wonderful to interact with you, and I look forward to our engagement going forward. And thank you for that, punchline which you've given us, which is that the second half will be better than the first half. And I'm promising you that I'm archiving this statement, because that, in a sense, is a guidance not for IndusInd Bank but for everybody.
Thank you.